Welcome to the Startup Espresso. I'm Hall T. Martin, the host of the show, where we talk about raising funding for your startup and the time it takes to have an espresso. I hope you enjoy this episode. Hello, this is Hall T. Martin with the Startup Funding Espresso, your daily shot at startup funding and investing. In selling a secondary shares, a price must be set. Since the shares are in a private firm, there's no market to review for a list price. Here are some factors to consider in pricing a secondary sale. Are the shares preferred stock or common stock? Preferred stock has preferences such as liquidation preference and takes precedence over common stock. Common stock is the equity type issued to founders and employees. Typically has no special rights beyond ownership. Since the stock is not publicly traded, it's considered illiquid. The price reflects illiquidity and is often set at 10 to 50% discount to the last price round. Time to exit for the startup is another key factor. Most secondary sales come in the last 3 years of the startup's life. And finally, the health of the company impacts the price, as the stronger the growth rate and metrics, the higher the price. Preferred stock, shorter time to exit, and a high growth rate will yield a higher secondary share price. Thank you for joining us for the Startup Funding Espresso, where we help startups and investors connect for funding. Let's go start listening to today. Hall T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.